Great. Kevin, Wendy, Jean-Francois, thank you so much for that. It's really, you feel that's the candor and the exploration of that relationship was really, really insightful. We could have gone on more. Actually, we are going on a little more because we're going to continue this exploration of the complementarity between CVC and VC. So this next session, venture innovation, how investment strategies in VC and CVC differ globally. And I'd be delighted to invite my colleague Maija Palmer, Senior Editor of Global Corporate Venturing, up to chair this session with her panel. I must say this is very much in our mind at the Set Squared partnership, as we've been working more with scale-up companies of late. And we did a piece of work with Global Brain, which is the CVC management fund for a number of Japanese corporates, Mitsubishi, KDDI, and working with their unit in Berlin. So we had Global Brain based in Berlin, representing multiple Japanese corporates, looking at our portfolio companies in the UK. And the international complementarity between that was, it was very new for Set Squared. It was an interesting exploration for us, but the ventures came good in the end. So I'm very much looking forward to this session. Maija, can I hand over to you?
Thank you so much. And I'm going to invite my panel up as well, if we can get going, because we are going to continue on this theme. I'll take this seat. You guys can arrange yourselves here. Again, a really interesting mix of kind of expertise. I'll let everyone introduce themselves more fully, but just to say, you know, we've got Gary Dushnitsky, who's kind of bringing the sort of, you know, more academic perspective on this, having done some really interesting research recently into trends in China. And then we have kind of a range of, you know, the actual CVC experience, you know, from Gurdeep Singh Kohli at SC Ventures, who's going to tell us how he does not just CVC, but actually everything. Andrew Murray at Citi, you know, again, talking about the evolution and of what they're doing, and also Claude-Sebastien Lerbourg from Saint-Gobain Nova, talking about kind of, again, I think one of the themes that I've kind of picked up on as we've been doing the prep calls for this session is just how much change there has been. So I've slightly co-opted the theme of this, because the theme of this talk was investment strategies in VC and CVC and how they differ globally. But actually we just thought we could focus even a little bit on that first part. How did they just differ from where they were kind of 5 years ago? Because everyone agreed that, you know, CVC today is not at all like CVC sort of 5 years ago, and things have really changed a lot. So I'd kind of like everyone to sort of invite the three CVC panelists to kind of introduce yourself, but also, and then we'll come to you, Gary, but introduce yourself and tell us kind of how different it is. How have things been evolving for you in the past couple of years? What are you doing now that you weren't doing a few years ago? And just to bring us up to speed. And maybe starting with you, Gurdeep.
Thank you, Maija. Hi, everyone. This is Gurdeep Singh from SC Ventures. In fact, I can't talk about how things have changed in the last 5 years, because we are a 4-year-old unit of Standard Chartered Bank. And I would say we were set up from the very beginning very differently, and we call ourselves a unique setup. As Maija was talking about, we brought together the lab or the accelerator, the investment fund, and a venture building arm all under one roof from day zero. And that is what made us quite unique compared to other setups. The thought process behind it has been that we are here helping the transformation of banking, not just the bank, which is one of the questions we keep getting. How do you engage with the mothership, and are you solving for the bank's products and services? And our answer is yes, but keeping in mind the transformation for banking as the ultimate goal, and then working towards our mandate. And the second thought process has been that by bringing together these three capabilities of the accelerator, the lab, the fund, and venture building, there is a lot of synergies across these activities, and we have demonstrated that as we have built our portfolio. So in just 4 years, we have now 20 investments and minority investments in fintechs, whom we work with, and also about 30 ventures, business ventures, which we have set up across 6 themes. And to build on, when I say unique or different, there are 3 or 4 aspects which makes us slightly different. First is, many organizations have the accelerator, the lab. We have now started to, over the last couple of years, make our capability available to clients. So when you talk about fintech engagement, we have a fintech bridge where actually clients can post challenges and we can match the problems and the fintechs together. The second is our fund itself. We only invest in fintechs we work with. That has become a filtering criteria for us, which is only once we have done a proof of concept or a production environment with a fintech, we look at them from an investment perspective. And the third is our venture building activity itself is different. We are setting up majority-owned ventures as standalone entities and companies, but we are engaging other client partners and financial investors as we build the portfolio across these 6 themes. And over the last 2 years or 3 years, I would say if one thing we have dialed up, it is actually our intent to co-create ventures with clients has increased significantly. For example, we recently announced a venture with Lenovo, and it's solving for the problem of supply chain management. And we said, why don't we solve for the problem of the sector rather than just Lenovo? And the second example would be, even for the fund, we have set up a joint venture in Shenzhen recently. So let me pause here. Happy to talk more about.
But a really great beginning, because it feels like you're almost tying up all the recent trends in this sector, you know, venture building, venture clienting, you know, accelerators, and also becoming a sort of services organization almost for other corporates, and it's all kind of tied up in under one roof. So a kind of a flavor of sort of this is what new CVC might look like, or what new corporate venturing more broadly might look like. Andrew, where are you now, and how different is it from what you were doing a couple of years ago?
Certainly. Well, I can certainly go back go back a little bit further. So I head up the strategic and fintech investments for the institutional businesses in Citi. So that's everything from banking, trading, security services, and the transaction bank as well. So we're the sister investing arm to Citi Ventures, who cover retail and retail wealth and some of the enterprise tech. Now, for our investing activity, goes back at least 15 years, but then it was very focused on market infrastructure. So setting up new trading platforms, new post-trade solutions, where it really needed a consortia to come together to seed a new market. And that was played out sort of asset class by asset class. Certainly over the last 10 years, and increasingly over the last 5, big shift towards what we'd more recognize as fintech, and all the sort of external innovation that's happening. And an internal realization that there's a certain amount we can do internally, but we need structured mechanisms to bring that external innovation into our organization and make the best use of it. So a few things. Organizationally, we're now part of the innovation organization, which is recognizing like what's our primary thesis for investing. It's to help our franchise adopt new technology. So our ICG businesses have an annual revenue of $40 billion. Our investment returns are not going to move the needle on that, no matter how much we think they're good. But using us as a catalyst to get these strategic partnerships with technology providers that allow us to do things that we wouldn't otherwise do, be it elements of co-creation, be it accelerating what they're doing, that can really help move the needle on some of our underlying businesses. Another theme parallel is looking at where we can apply these to client problems. So initially it was looking at sort of our problem set, but now we're very much looking out and saying, well, we shouldn't just be solving our problems. There are ones where we can partner with technology companies to help all of our client network, both on the sort of fund and corporates. And I think the other big theme is the sort of ancillary parts around the investing. So we've been investing for a long time. I think one of the common constraints was the organization's ability to adopt and partner with just the onboarding, the testing, the POC running. So there's a lot more organizational weight and coordination put into setting up our innovation labs so they're available as a service to the business. So that from an investing standpoint, when we see a good idea and syndicate it with the business, it's not left up to individuals to work out how to navigate the internal complexities. It's more there is part of an innovation playbook that we can call on for a lot of these different functions. So it's really from the starting point of we want to internalize this technology and accelerate it and support it, what are the different components we need to align internally? And not all of those are investments related, but they can be a constraint on our activities. So that's really some of the key changes over the last few years.
Okay, again, a good, and some of a similar trajectory to, I think, what Gurdeep was, talking about, an increasing looking outwards and solving kind of broader problems rather than just thinking about narrow, bank-related issues. Claude-Sebastien, what about you with Nova? I mean, one thing that's very obvious is that there's a lot more investments that have happened recently. So talk us through how the Saint-Gobain journey has gone on this. I think it'll come on as you start talking.
Okay. So the path of Saint-Gobain to corporate venturing started in 2006 by setting up this department called Nova, where we did indirect investment through funds. But at the time, we did try to acquire startups or to make some investment, but it was not very successful. And after the crisis of 2008, I think we decided to only do partnership. So the department was mostly helping to structure joint development agreement between startups and the group. We've evolved actually recently, following the leadership of our current head of CVC, Mina Sapalian. In 2015, we progressively infused the culture of doing minority investments to gain learning and influence some developments. And so I joined in 2018, when we were resettling the way we do the investments in a more systematic way. And starting from 2019, so before that we had just a few investments. And starting from 2019, we have this process that is very optimized to do seeds or Series A investments, taking minority stake in startups below 3 million euro. So we have this process where very quickly we can take a decision if there is a mutual strategic interest between the startup and one of the business or at the corporate strategy level. This has generated a very good dynamic between gaining more deal flow and more deals, more partnership deals coming, with or without investment. So since 2019 that we do more systematically those investments, we now have a portfolio of about 30 companies, and we plan to invest in 10 this year, for about 20 million euro, something like that.
Okay, so it's a real industrialization of the sort of volume and the process and everything.
But we're still at the beginning in the journey. We still invest today through the balance sheet of the companies that are, or the holding company where the startup is located, or from the balance sheet of the company that is most strategically related to the startup.
So Gary, you've been very patient, but help bring us that kind of macro and academic view, because we've heard kind of 3 specific journeys here, but how does that match with what you're seeing? Because you look at hundreds and thousands of strategies day in, day out. So what do they match with the overall trends you're seeing and observing?
Yeah, no, and that's a great question. And I think I was just joking with Jim earlier. I think I keynoted the first global corporate venturing a few years back, and it's great to see the kind of evolution of the ecosystem and the maturity of the ecosystem. So I think that, in terms of embracing such vehicles as accelerators and venture builders, and really kind of plugging them together, that's a level of maturity that I think maybe 10, 15 years ago we have not seen, and is really kind of grown since then. So it's great to see that. I think that in terms of geography, we might, it seems clear per some of the presentation that we've seen that corporate venture capital is very present across the globe. This wasn't necessarily the reality. Some of us might remember that. I think I'm sharing the gray hair here. Especially in areas such as China and so on and so forth, corporate VCs represent actually a major part of the venture ecosystem. And then finally, in terms of the strategies and objectives, I think that what I've seen, and I'll be curious to hear the panels and beyond, is an evolution of the set of objectives. In addition for looking for kind of cutting-edge technologies. We are also seeing efforts to actually build an ecosystem, and we see efforts such as, NVIDIA's GPU ventures, Autodesk Sparks, and others, trying not necessarily to look for new technologies, but also to grow an overall ecosystem, and how do you unlock that kind of value proposition.
Yeah, and you mentioned the regional differences, which are becoming a little less extreme. I mean, it always used to be the sort of, certainly the numbers in Europe have been going up and everyone is more active, but how really do we compare with regions such as China? I mean, because I think you've been doing some recent research which shows really how, and we have heard presentations on this also, but just in terms of what you're seeing in these really large portfolios that we're seeing in China now.
Yeah, so I think the first thing that I can tell you is that if you look for a corporate venture capital website in China, you probably won't find it because the majority of them are on WeChat. And so just that simple observation was something that we looked at. For us, or for me as an academic, one of the things that I look for is really the quality of the data. And so we spent over a year just triangulating multiple data sets, international and domestic one, just to make sure that we have a good picture of what's happening in that sector. And what we found out is that different providers might touch different part of the elephant. So some interested in IT, other in industrials. And so just looking at any single one of them can give a somewhat skewed perspective. And so when you actually integrate all of these databases, you get some keen insights. One of them is, I think, an observation that was also shared earlier, which is corporate venture capital is actually a very important part of the ecosystem. And I think, we can all think about Tencent and Alibaba with portfolios in the high hundreds. But there are also many, many other players that are active across different industries. For us, one of the interesting things to see is in a very kind of top-down economy, to what extent does kind of government mandate and industry of national priority play out. And what we've seen is, at least for the period that we've looked at, is that just overall industry growth, industries that experience dramatic growth in sales, probably get as much of the CVC investment as those that are areas of national priority, which I thought was quite interesting in that setting.
Yeah, but I just thought it's interesting to kind of always take that temperature check, because we're seeing these, again, Claude-Sebastien's portfolio, and now kind of, whatever it is, 30-odd companies. Gurdeep has, internally grown ventures and the minority investments together, large portfolios. But again, we just keep needing to take that temperature of, is Europe keeping up? And that's the sort of forever question there. Another kind of thing, so now that we've kind of talked about just how everybody's, CVC itself has evolved, the other part of this panel is about sort of working with VCs. How does that then change? Is, again, your own approach has matured. Is that changing the way that you're then working with the kind of VCs that you're co-investing in? I mean, again, Gurdeep, how does it work for you? Because you do so much of everything. So are VC relationships good, different?
They're evolving. I would say they're evolving in the sense that we are yet to build our portfolio. I think for the VCs to start getting interested in looking at the portfolio. Now we are having conversations with VCs when it comes to our ventures requiring scaling, capital to scale up. So our first phase is always co-create with strategic investors, and which is why I think somebody mentioned the meeting of the minds is very important, which is we have a strategic interest in building our own venture portfolio, and which is why we work with clients as a first starting point. And when they reach a stage where they require scale-up capital, we definitely reach out to VCs and say, take a look at this portfolio. And in fact, not just the portfolio or one particular venture, take a look at the ecosystem of ventures. So if we are talking about the theme of SMEs and world trade, we are not building one venture, we are building a portfolio of ventures which is solving different aspects of the SMEs problem. And that, hopefully, we believe, is more appealing to the VCs to look at the portfolio rather than just one standalone venture, which is when you say, why does it make sense for a corporate to drive it? Well, it makes sense because we are going to, complete the entire puzzle of that ecosystem. And when it comes to the fund itself, as I said, in China, we are opening up to partnering with VCs to set up a fund together. But predominantly it is on the venture building portfolio more than the fund itself.
Okay. And so, Andrew, again, does that sort of, how's your relationship with VCs evolving? Because, I mean, Fintech is an area where VCs have been incredibly aggressive and in some cases very successful, but you are also growing up and maturing and have a lot more to offer.
Yeah, I think I'd also highlight, when looking at the co-investments with VCs, we do a lot of co-investments with CVCs as well. Mm-hmm. And even there's a big spread of mandates. I mean, even within Citi, we've got the institutionals, we've got 3 investing functions. Institutional side, heavily strategic, mainly Series A and B. Citi Ventures, more sort of CD, can get in ahead of a strategic case, and the impact fund. So even in one organization, we've got 3 different mandates. And we've seen it evolve a lot in a lot of our peer institutions, where there are some more strategically oriented, some have shifted to be more sort of merchant banking style investments, like can they do the 10, 20, 50 million for a financial return? Can they then flip completely and help manage client money? And then they are effectively a VC, they're purely financially oriented. So even across those spectrum, there's a lot of differences in how we co-invest and engage. But I think in looking at even pipeline sourcing, so our role is investing, but it's also as a conduit for new technology in the bank. So the most productive relationships with venture VC firms is also in the pre-investment stage. So maybe there are companies that they've seen that are interesting, they want a view from a bank, where we have good networks internally to find out who are the right people to look on it. And maybe we just want to use it as a product. Maybe we do want to co-invest, or maybe it's just useful feedback for the VC. So that sort of iterative dialogue where they get a better understanding of what we're interested in, we get a better understanding of where their areas of operation are, is a good foundation for then going into a co-investment opportunity. And then both parties have a good understanding of what we're going to bring to the table. And with VCs, there are some who are focused on particularly our capital markets area, or maybe more sort of enterprise SaaS. So it depends on investment by investment. And given the different models in CVC, it's an education for them as to how we're structured, how we partner with these companies. We always look to commercialize it. We'll generally be working quite closely with them. So we view that as a positive. I think most VCs do. Mm-hmm. But it's getting that sort of calibration of relationship. And it can be something they're invested in and bring to us. It can be something we're invested in early stage and bring to them as a known entity as to what support they can provide in a governance and a commercialization. So I think it's been a good combination in many of our investments. Yeah,
okay. And Claude-Sebastien, now that you've got, again, this kind of quicker system of kind of doing these investments, again, has that changed, the relationship where you're co-investing with VCs? Because they know that you're kind of a more responsive partner maybe now than you used to be.
Yes, so the way we've been working with VCs has evolved through time. Since we have this process of investing directly that is more easy, the first natural feeling was to say, well, we don't really need VCs anymore because we can invest directly and we have a big deal flow that we cannot process completely. But actually, it really depends by region. So before moving back to Europe and handling the Europe part, I was based in China, managing the Asia part of the corporate ventures. And before leaving, I decided to make an investment in a VC fund in China, focused on advanced material. And the thesis behind was that the dynamism of the advanced material in China was really high. So it was there was a paradigm shift where they were not just catching up with the technologies with the materials that are made abroad, but they were actually going further at a similar cost. And so in this way, it really helps because advanced material is a very broad topic, and having a small team in Asia is very difficult, especially in China, to follow everything that is happening. Now that I'm in Europe, I'm actually also thinking that the way the ecosystem of Europe has evolved, so we have much more startup investment today than there was 5 years ago. So Europe is super dynamic also, and is very complex. So the ecosystem in France and Germany, UK, Nordics is very different. And for us, being a French company, we have a very good visibility of what's happening in France. but I think we could benefit also from having LP positions with strong VC partners that have a better visibility on early stage investments in specific regions.
Okay.
The other aspect I think that is important is that we've seen, so in the old years, like 5 years ago, there was not so many construction tech VC, for example. We had invested in the US in Navitas Capital. That was, I think, one of the first one in PropTech, Contech in the US. But in Europe, it was nearly, there was nearly no VC having this idea of tackling the construction technology. And as the group, we are very much committed to reducing the impact of construction on climate change. So now we see a lot of VCs actually positioning themselves on this area. So it's also interesting for us.
So there's more kind of, specialists, I guess, to partner with, and they would then, I guess, have a different interest in partnering with you as the experts, and so that changes the dynamic somewhat. Gary, how does that kind of, again, looking at from the macro point of view, but, are the lines blurring? We've been kind of hearing about how in lots of cases, there's so many flavors of CVC, and some of them act really very much like a VC, almost like a VC. Some of them have gone the other way. But what's the overall trend in those partnerships?
Yeah, no, I think that one observation, and this is somebody who's been looking in this field for a while. In the olden days, I would get phone calls from corporate VCs asking me how can we get into syndicates with VCs. I think over the last 5-6 years, it's reversed. It's actually getting phone calls from VCs, maybe some emerging managers and so on and so forth. How do we get into syndicates with corporates? And so I think the balance of power has changed and really talks to the maturity and the ability to really live up to the value add that we've heard over here. So there's definitely that going on. I think that across the board, we've seen, even within this panel, we've seen different flavors in terms of what the objectives are for the different corporates. And so the one thing that I'll always tell the outsiders is just because you might have a more GPLP homogeneous structures, don't assume that to be the case once you step into the fascinating world of corporate venture capital. I think that is quite important. And then when I look at syndication, and it was mentioned syndication across within corporate VCs, one of the things we find some interesting dynamics. So I think in the work that I've done in China, one of the key challenges or tensions we see is thinking about the syndication as a balance between building and injecting stability and financial cushion to portfolio companies of interest versus managing the exclusivity and the kind of competitive dynamics. And so balancing these two forces is quite important, and across different investment theses, how to balance that might look differently.
Yeah. So we're almost at the end of our time, but I'm tempted to ask that question that's kind of been floating around the symposium, which is, if we are now looking at tougher times, whether it's because we're facing stagflation or, cost of living crisis, energy crisis, and all the rest of it, just maybe a really quick thought from each of you, but how are you sort of preparing for that, or is that changing anything about the way that you're thinking about your portfolio? And I'll sort of start with Gurdeep and work across.
I think we'll definitely accelerate the co-creation and the partnership element of it. The main point is that one organization has a view. Either you are solving for your own organization, but if you're solving for the industry, you do have to form as many partnership. And I think to your earlier point, Maija, which is the portfolio needs to widen, because the probability of success is not very different. Obviously, corporates would like to believe that we are going to be more successful than the VCs, but actually, it is still a game of probability, which is you have to have a wider portfolio with a broad range of partners, and obviously keep the client in mind, which is if you can validate the proposition with clients and with partners, your probability of success increases. So that's the game plan, which is diversify the portfolio.
Okay. Diversity, Andrew?
Yeah, I think in looking at what we do, I think there are, in looking at, the solution set, the problem set and the solution statements haven't really changed. So in looking at some of our later stage portfolio, things that we thought may exit, this year, we'll drift into next, and it's particularly that later stage, but that's more a sort of funding question. It's not really, is that company helping to solve my problem? So we haven't really seen any slowdown of activity earlier on in the Series A, B where we are, and particularly this sort of volatility driven by the market, certainly on the capital market side, is creating like higher trade volumes, which for a lot of the automated digitization work we're doing is a positive. And we saw exactly the same thing when COVID hit. And there are lots of sort of risk functions going, oh, what's this going to do to your portfolio? Is it going to be bad? And a lot of the portfolio companies were blowing the lights out because a lot of the digitization that was a nice to have overnight has suddenly become a must have. And like growth rates were tripled versus their budget. So it's that sort of, has what we're looking at changed? No. Have some of the risk factors, particularly later on, become a little bit more acute? Yes, but it's one of the many risks that we take into account.
Yeah, and some possible upside as well, depending on which part of the portfolio you're looking at. Yeah, Claude-Sebastien, what about, I mean, construction is an industry that can suffer in climates like this, so is that a concern?
Yes, I think it's a difficult question because history shows that there are ups and downs, and that we might be affected by if there's big correction on the market. But at the moment, the position that we have is to build on the momentum that we created, and we believe, as it was mentioned, that a lot of the answer will be in the startups we invest in. So.
Yeah. And Gary, you've literally written books on this. So you've seen lots of downturns and upturns. So what would be your advice, I guess, to people who are maybe facing this for the first time?
Sure. So I think that, CVC is an old phenomenon dating back to the 60s. I think it used to be the case that CVC would get truncated as the market drops. We've fortunately broken that link, I think, 10, 15 years ago. And so we actually see CVC being not just cyclical, but also counter-cyclical for all the reasons that were articulated here. That's the first observation. The second one related to that is many CVCs have survived CEO transition. And so there's really kind of maturity of the function within the organization that is clear above and beyond any top management coverage. Not that that is not important, but I think there's a certain viability there. And then finally, just look at the room over here. We have now developed a talent pool of corporate venture capitalists that know how to build a kind of robust, multi-pronged kind of anchorage in the corporation. So even if any particular organization suffers anything, the ability to build up and scale up those capabilities, I think, is at a different point than where it's been in the past.
Okay, and we are out of time, but I think on those thoughts, diversify, keep going, don't panic, all seems like good advice. But thank you very much for all your insights.
Thank you. Thank you.
Thank you.